this. There we go. Okay, so I suspect that you're all bookkeepers, and some of you are new at this. Some of you have been using the QuickBooks for a long time. But sometimes what I find after all this time, we either we micromanage the file too much, and sometimes it's time that we could simplify, and then sometimes we don't use it enough. So tonight, I'm going to go through not only how to use QuickBooks, that is a simple way of doing things, but also how to be proactive, because we bookkeep for 3 entities. We bookkeep for the business owners that we work for. If you're a freelance bookkeeper, well, we bookkeep for our clients. We want to make sure that they're safe and from Revenue Canada, and we want to make sure that the file is accurate and the bookkeeping is accurate enough that they can make informed decisions. And of course, we bookkeep for the almighty Revenue Canada, and that's the 3 people that we bookkeep for. And Revenue Canada is at the top of the heap because they have all of this compliance that we have to follow through. And this is where sometimes we can get into trouble if we're posting and not knowing the rules, especially with HST. And next thing you know, we have inaccurate books, and a possible audit shows up and is knocking on the door. That auditor is knocking on the door, and we may or may not pass that audit. So tonight, what I'm going to do is talk about QuickBooks, but also with your postings, how to be proactive, how to keep the file accurate. There is a QuickBooks Advanced session in a few weeks. That's where I'm going to teach you how to troubleshoot, how to do HST, source deduction integrity checks is what I call them, because sometimes you want to cross-check, is the program itself doing what it needs to do, and there's no errors behind the scenes. But that's not for tonight. Tonight we're just going to stay nice and simple and just work the file as if you're brand new on the file, and then we'll just make sure that you are doing what you need to do in order to keep your bookkeeping accurate. So I'm going to share my screen here. And we'll pull up that. And so one of the things that I like about QuickBooks, so in my time of owning my bookkeeping practice, we had clients using Sage 50, Xero, Profit Master, New Views, SAP, multiple programs, and they all come on different platforms. Even QuickBooks Online is a completely different platform than QuickBooks Desktop. So in my opinion, if you're working QuickBooks, you picked the right one. After all these years, I've almost come to the conclusion I don't want to work another program. And so this gives me what I'm looking for when I try to find errors. And we all make errors, so don't feel bad that you make an error. We all do, we're human. But this has the processes to let me go in and find the errors when I was kind of brain dead or had sticky fingers, or I was thinking about dinner at the time when I was posting things. So this allows me to go and cross-check my work really well. And then I can find my boo-boos, and I can fix them before the business owner or my clients or Revenue Canada comes along and says, hey, what's going on with this? So what we're going to talk about tonight is just sort of take a look at QuickBooks and the flexibility it has. And one of the things that it really does nicely is however you read things. If you are a visual person, the home page has the pictures, the arrows leading to certain things. But it also has the tool page, oops, there we go, where if you are a visual person using words rather than pictures, you can find the same things. So if I come to the tool bar, I can see create invoices, but if I'm a visual person with icons and pictures, there's my create invoices here. And then once I've created my invoices, there's receive payments. But I can also come up here, and I just have to get rid of my stop share. I have to let it drop up. So there we go. But I can see I can get receive payments here. So there's different ways you can do the same thing. So it's very flexible depending on how you like to use use things. So that's a great thing about it. And I'm going to just live and breathe by the toolbar right now, because this homepage wasn't around in the 1990s to early 2000s. Actually, it wasn't around until 2009. So all of us that have been working it older, back in the old days, well, we're going to classify it the old days, we've literally lived and breathed the toolbar. So I'm still used to that. But if this is new and this is what you use, that's perfect, because you're finding the same thing in different ways. And I like that. I like the fact that I can create invoices or enter bills or pay bills in multiple different ways. So what I find, if you're new in QuickBooks, the best thing that you can really embrace is you can't do anything wrong. You can unfix everything, and it's not going to hinder you. Where years ago when we were on DOS, if you made a mistake, we were doing journal entries to fix journal entries. So if you went the wrong direction, it should have been a debit instead of credit. We're trying to fix that. And if we didn't get it right, we had to fix it again. So QuickBooks allows us to delete. We don't have to use the void. We can delete. So as a matter of fact, I'm a fan of not using the void icon, because what happens there is you have a bunch of zeros on your general ledger. So one of the things I'm going to show you tonight is how to go and look at your work. And that's about customizing the most important reports so you can check and see if you're accurate. So one of the things here is if we talk about bookkeeping, so I'm going to assume I've got some experienced bookkeepers, and I'm going to assume that we have some inexperienced bookkeepers. So I'm going to do a quick review what bookkeeping is all about. And it is very simple. We bookkeep for accuracy so business owners can make informed decisions. And we bookkeep for accuracy so we can be compliant with Revenue Canada. We have source deductions, so that's payroll deductions. We have HST, which is the biggest ticket for audits. We have EHT, we have WSIB, and there's a few other audits that can show up and knock at your door. So the most important thing here is if we get our data entry right, then business owners can do what they want to do. But guess what? Pat yourself on your back for this career choice, because business owners, accountants, lawyers, business coaches, they can't do anything to grow their business or troubleshoot the business without us. So pat yourself on the back for this career choice. So anyways, the most important thing here in a business is we have to track the accounts payable. Who do we owe money to? We have to track accounts receivable. Who do we owe? Who owes us money? We have to track the transactions. Whether you're a sole proprietor, a partnership, or a corporation, bookkeeping should stay the same. There is a little bit of a difference. If you're a sole proprietor and a partnership, it's about the revenue you bring in, tracking the cost of goods sold, and tracking the overheads. And the business owner will pay tax on the net income if it's a profit or a loss. But with a corporation, it's law that we have to reconcile the balance sheet. So it means we have to reconcile our bank statements. It means we have to reconcile our credit cards, lines of credits, mortgages, whatever is being tracked in the business. However, I found over the years that if you're a sole proprietor or a partner, when it's just really about the income statement, the revenue, the cost of goods sold, and the overhead, it doesn't matter. You don't know if you haven't captured everything if you don't reconcile the banks. So as far as I'm concerned, the bookkeeping for a corporation to a sole pro to a partnership is all the same. And besides, if you can reconcile the bank statements and the credit cards and any other lines of credits or mortgages, you know you have your books right. It was years ago, I had a client that was in Germany, and they did $640 million a year in sales worldwide. And every time I had a large client like that, they didn't care about the income statement. It was about reconciling the balance sheet. If the balance sheet is right, the income statement is going to be right. It's just automatic. So we want to monitor our work. And that's very important. We have a weakness right now across Canada that data entry finishes, but no one's going into the reports to see how it looks. And so I really want to press upon you how important that is. I'm going to do a little bit of troubleshooting and proactive work with you as well. So the first thing I'm going to do is I'm going to come over to the chart of accounts. I can pick up this chart of accounts here. I can also go to reports and pick up the list and go to list, and there's the account listing there. And it's really interesting. An account listing and a chart of accounts is the same thing. It's absolutely the same thing. And when I come over here to chart of accounts, this is your chapters in your Bible. So just think that the bookkeeping is a part of a Bible. It's part of a book, and we all have chapters, and each one of these accounts is a chapter. So some of the things that I do here is I don't take QuickBooks template account listing. I customize it to what's happening into a client's file. So I adjust it, and I can come down here to accounts, and I can look at, do I delete an account that I don't need from the template? Can I make an account inactive if I don't need it anymore? Can I create a new one, or can I edit it and rename it? Very simple stuff. And it all comes from down here, accounts, and to new, edit, get rid of. And by the way, if there's activity in an account, you have to make it inactive. You can't delete account that has activity in it. And so what happens here is I live and breathe, and I will turn around and I will design my account listing towards the client. And most importantly, I don't over micromanage. An account listing for a company doing $640 million a year is a page and a half. So if they don't need a 5 or a 10-page account listing, we don't either. And so it's really important that we don't over micromanage a chart of accounts. And so very simple stuff here. A couple of things I want to show you here. When there's multiple banks, which this is proactive, this is being proactive. And the reason I put the last 4 digits of the bank account on the multiple accounts that I have, it's because it might make sure I'm not posted into the wrong account, and then I have to go fix things. So when I pull up the bank statements, whether they're online downloadable or I print them out, I want to know which bank statement that I'm using. So it's easy to just place, and I can just right click here, edit. Okay, come on. Edit, and I can play around right here. And I can change that and make that the right account listing. And so I have different numbers here. I could do, if there's the same multiple visas, TD Visa, Scotia Visa, Royal Visa, I could do the same thing there. Some companies have employees that have their own business visa. So I think it's really important to have the last 4 digits so you know who you're posting into, what statement are you using. You're going to notice 2 things on this accounts listing. You don't see numbers, do you? It's not as important as it used to be a couple of decades ago. It is important for an accountant, but not necessarily for a bookkeeper. And so sometimes it's nice just to put everything in alphabetical order according to the type. We have bank, receivables, other current assets. We have fixed assets that are all your furniture and fixtures and equipment and vehicle and leasehold improvements. Then we have accounts payable. We have credit card, which is a liability. It's who you owe the money to, the Visa companies or the credit card companies. We have our other payables. We have our equity accounts, our income accounts, and I'll get into what cost of goods are sold in a couple of minutes. And then we have our expense accounts. So a couple of things here. The other thing that you're not going to see, by the way, is I don't sub account. The only reason why there's a sub account here is because I just kind of want to show you how it starts to look. Sub accounts, if you go too far into sub accounts, it becomes unruly and really hard to read at the end result, the higher level of looking at an income statement. So you will see that I've instead over the years is I go revenue, and what is it? Revenue, what is it? Revenue, what is it? Revenue, what is it? So they still show up as if it's a sub account and they're all in line. Same with COGS. So COGS or CGS is cost of goods sold. And this here is very important on a file, is because what did it cost you to make those sales? So if there's things that cost money to get that sale, that's what a cost of good is for. Some industries have them, some industries don't. So it just depends on who you're working for or what your client, if you're a freelance bookkeeper, what better suits the client. And then the overhead expenses, so these are expenses, is everything that costs the business to stay open. So that is your year-end accountant. That is a bookkeeper if there's an outsourced bookkeeper. That's auto expenses, auto fuel, there's chargebacks, charitable donations, Christmas expense if you have a big Christmas cost, and there's all kinds of things. So not all files will have exactly this chart of accounts. It is tailored to each individual company. And to tailor them, just come down to accountant and play here. This is your new, edit, delete if it's empty, make inactive if it's not, and you can show inactive accounts as well. So maybe you have to activate an account eventually in the future. So you can show them, and all you have to do here is unclick, and now it's active. I don't want that to be active, so I'm going to click and put the X there, and I don't want to look at this stuff forevermore, so I will go hide my inactive accounts. I think that's very important that you keep your chart of accounts streamlined, I think is the better term for that. And if there's stuff that you're not using, so I don't have, say this, I don't have leaseholds on this file, so I can come along, account, and make inactive. I can also right click on my mouse and the same scroll down screen shows up and I can make inactive, and off it goes. And so you can kind of keep this nice and streamlined. And if you want a report from any one of these from here, let me see if there's federal tax payable, I can go to report, quick report, and that's going to let me see the activity. And so it comes up a little on the messy side, but I'm going to show you in a few minutes how to fix that. It's how to memorize reports, so you don't have to be fixing this all the time. It was interesting in the beginning of my days back in the early 2000s, I would open up this and I would fix it and clean it up and do debit and credit and amount and get rid of amount every single time. And I didn't know that I could come up here and memorize my fixing and create a template. So we're going to do that. I'm going to do that in a few minutes. So anyways, the account listing, I would say keep it as simple as possible, clean as possible. I've seen sub account after sub account after sub account after sub account. And what happens is when you have a sub account like here, too many bookkeepers are posting into the header. So if you have a piece of activity that is, you question whether it's building or office, I'll see them posted into the header. We don't want to see anything into the header. It's just a header. What happens here is when you go to the general ledger, repair and maintenance other is going to show up because QuickBooks does not know what to do with it. Nothing's supposed to be in the header. So if you go to the general ledger and you see the word other and it's not a real account, that's what's happening. You've got stuff in the header. So before I move on, I'm just going to say, Janelle, is there any questions so far?
No, we're all good for now, Sandi.
Beautiful. Okay. So we all know that most of the time we have to track our AR and our AP and our cash activity. This is where the business owner intentionally or accidentally goes and buys things from their own personal credit cards, cash out of their pocket, and we go, what are we going to do with this? So we want to talk about that. And we will talk about how to post in the banking, the checking, and the credit cards. And it's interesting, years and years and years ago, I used to post in my credit cards and I would bunch everything, bunch it all the fuel, all the restaurants, all the travel, and it would be a journal entry. But I haven't done that in years because QuickBooks offers a great function how to properly post in credit cards, and very easy. You don't have to think. You could be thinking about making dinner at the same time because it's so easy. And then you get to reconcile just like a bank. So I just want to make sure everybody's on the same page for that. But there's two types of accounting, and one is cash accounting, which means you're not tracking an AP and accounts payable, and you're not tracking AR. So you're living and breathing by banking and write checks or make a deposit, or you might track an invoice and receive the payment because you create the invoices and you receive the payment off of accounts receivable. And that's sort of accrued accounting. So we have cash accounting where it's after the fact. You're getting the paperwork and all the activity has been done. It's been paid. And so a lot of times you can just come into banking, write checks, or make a deposit. But when we're a corporation, you can't do that. The only time you can do that is if you posting in bank fees and all that. So a corporation accrued accounting is based on a date, by the way. You have to, it's not when you receive payment, it's not when you pay a bill. Accrued accounting is when you've posted it as a date. So we want to be able to track our payables. So payables is all your supplier invoices. It's who you owe money. So when we come in to pay bills, so enter bills, we're going to come in here, and the vendor is the vendor name. So I really want to sort of address one issue that we have in the industry right now. It is not restaurants. It is not gas stations. Okay. It is for a gas station. It's Husky, it's Esso, it's Shell, it's Pioneer. What you want to do is tell the true story. So when you're looking at the details, you know it's Pioneer, you know it's Esso. And when the business owner says, there's no way I've been to all those gas stations this month, you can say, but I got a pretty good picture that you have been. And so the same with restaurants. It's not Kelsey's, it's not Turtle Jack's, it's not Montana's or the local store. It is the actual vendor name. So one thing that's being taught right now, sadly by QuickBooks, and I just accidentally put that in recording stage, but it's true. We don't want to do that. You want to tell the story about who is the real vendor. It is not line of credit. If you're posting a line of credit payment, is the line of credit from Royal Bank, TD Canada Trust, or a mortgage company. So you want a true name there. The next thing I want to state here is the reference number. So many times I see an invoice number here in the details. If you put it here, then that's sufficient enough. So I'm just going to do one right here. I'm going to go Staples. And well, Staples might have an invoice number that's on the receipt. You can do that. If it's Bell Canada, I'll do statement January. I'll say that date is September. So September 2021. And that is because we know Bell, Horizon, Union Gas, and any other city, Owen Sound, Wyerton, property tax, that sort of stuff, they don't come with an invoice number. So you can state something here. And if you put the year 2021 or 2020 or 2022, it won't come up and say you have a duplicate the next year in September. If you leave it like that, or you spell it out, it will come up and say that's a duplicate next year. So very simply, bingo. That could be your memo when there is no invoice. And if it was $113, office supplies, and sometimes I might say September because I'm kind of OCD, guys. So I like to tell the story in the memo. And I will post. And so, by the way, I am not a short form person. I like to tell the story. I do comma with the year. And yes, it is being a little OCD. But if I get it right in my review of my work, it makes me go faster. So here's something proactive here, is say something in your details. Don't leave these empty, because it gets troublesome in an audit, and it gets troublesome when a business owner says, there's no way I've been to Business Depot and spent that money in the month of September. And if you open up your GL in a meeting, you can say, well, you bought toner. Now, I'm not saying that if somebody went to get office supplies, general office supplies, that you put everything that was purchased on the receipt, but putting something here, general office supplies, right here just says it was the basics. If it was $1,400, you want to say something that various, you might want to say 4 toners. Say, for example, that reason is for being proactive. $1,400 to an accountant is good. That accountant's going to come back and say, is that not an asset? So if it's over $1,000, I might just say there was multiple trips and it was paid in one card, or it was expensive stuff like we bought 4 toners and a printer that is only like $800. So I wouldn't asset $800, or a computer that's $250. We don't do that all that much anymore, but for toners, if you say why it is $1,400 right off the bat to the accountant without them coming back and wasting your time, you can say 4 toners, there was some expensive stuff here, and it was just a big expense that month. It was a big office run. So that's important there. And the second thing is what I really want to press upon. I do find some bookkeepers that are afraid to use the tax code. Don't use the tax code. The reason is when we get to the general ledger tonight, that tax codes help you look at things for accuracy. So we really want that tax code used. And sometimes I bet you one of you, or a minimum of one of you, is going to say, but it's always out $1 or a cent like this. And you try to work that out. And all you have to do is come down here and put that cent plus or minus and just adjust the GST. It's just a rounding off thing. And so an auditor is not going to care about a cent. They really are not going to care all that much about a cent. They're looking for bigger ticket items. So here is Staples Business Depot. You have an account. That's why I'm in Enter Bills. And you will pay that at a later date. So accounts payable is about paying things at a later date. And if I wanted to go pay this, maybe I receive a statement and I have an account. Well, now I'm going to go pay bills. And my listing is right here. And here comes Staples for the $1,400. So it's really cool. With pay bills, I can pay all 3 of my outstanding invoices at the same time. And by the way, tonight, let's just not look at dates, because I made this sample file up a few years ago. And it takes a lot of work to make these up. So I just live and breathe by an old file, but it's the same thing whether it was today or 4 or 5 years ago. So if I wanted to pay 3 invoices at the same time on all of these Staples, then I can just click these here, and then I know I'm paying $1,900. And the important thing in pay bills is watch your date. In essence, in everything you do when you post, it's the day of the date of the invoice, not the day you're posting. So it's the date of each invoice, and that's really important for year end. So you have to make sure that you stick to the dates that are on any invoice. You're going to turn around, and if you want to be printed, If it's assign a check because it's handwritten, it's already done, then we'll assign a check to it. And if you have multiple bank accounts, it's very important. Definitely pick the right bank account that it's going to come out of that bank. And everything I do is trial by error. I've done all my errors. I've done all my mistakes in the past. And with me, when I've bookkeeped and I see an error, I know exactly what I did. I already know exactly what I did, but this sort of stuff is my proactiveness on how I can fix something that was a mistake right away. So that's how my file is. If I wanted to pay this, there's my check number right there. So I can put my check number in there. If I e-transferred, I'll use the word debit. And that's key as well. If there's an old symbol, that's a transfer. I don't really do that anymore. Just go debit. And what happens is everything that's outside of a check number, if there's a check number, you want to put the check number in because they will all be numerical in your reconciliation. If it's a debit, you can do that. And as long as you spell it right, the same time, all the time, they'll be in the same order as your bank statement when you're trying to reconcile. So it's really easy to go down your statement and click, 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 and then reconcile. So I wouldn't do debit 1 minute, debit the next, make a spelling error. Just so as bookkeepers, we have to pay attention to details. So if you spell it the same, whatever you want to make it, if you spell it the same, then it will line up for you in your reconciliation. And then, of course, if you want to pay individually, it will come up and say, do you want to pay more? If I want to pay by batch, and I want to pay all of these at the same time, then it'll be to be printed. And I just cleared them off. And so what happens is if I want to print the checks, then I can automatically go here and print the checks. Again, make sure you're starting with the right check number and make sure that you are sending them to the correct bank account. And then if you make a mistake, you can select none and then just pick and then send the rest of them back. The other route that you can go, and I just got to get my share to get away from my toolbar. But there's also a file and print checks over here. I'm just going to stop the share and then start the share again, just so I can get that toolbar. Anyways, if you go to file and print, and then you'll see print checks, and that same screen is going to come up. So that's kind of a neat thing. So you can print by check, and you can print and put a check number to it without printing. Some people still handwrite checks. That's still common. Some people print because the addresses and everything are on there. And that's the other thing. If you wanted to go to the vendor center, let me see where that is. I got my my toolbar is missing because my screen share is in the way. See if I can bring that down. No. Okay, just see if I can find another route. But if you go to the vendor center, that's where you're going to put in all the addresses and the supplier information. I'm going to make a suggestion. If you don't print checks, you don't have to go through all that and put everybody's information in. If you're not printing checks, you don't really need to. If you find a need for it because you have it's easy access to the phone number and to the address and all that, then absolutely, by all means. I find if you're a freelance bookkeeper, we do less of the background detailing. If you work for an employee and you're there for 40 hours a week, we do more for the file to make sure it's nice and current and we can work it better. So with customers, I'm just going to move on. Janelle, is there any questions in the payables?
Yeah, I just have one question from David.
Mhm.
He says, how do you register the sale when it's cash and I make a deposit?
Okay, we're gonna get there in a second. So we're just leaving payables. I'm gonna come to customers. Okay, so David, just hang on for a second. I'm gonna come into the receivable side of things. So one thing that we can do is we can create invoices here. So this is where we're going to track who owes us money. So that's what accounts receivable is who owes us money. And so we can send out statements, collection statements, and so forth. And so if I turned around here and I have my invoice and I go to ATV control systems, I can throw in my date. Again, it is about, if it's accrued accounting and you're creating an invoice, it is about the date that you're invoicing. That's very important. You can start your invoicing numbers anywhere you want. If it's a brand new company, I don't usually recommend to start at 1. People don't need to know that you're the first client. You can start at 100, you can start at 50, you can start at 1,000. It's your choice. You can turn around and set up your items. So here we have this is actually accounting company, and we have bookkeeping services and clients. And if you wanted to add a new service, it's all about, or a new product, it is all about what you're going to call it and how you're going to tag it and where you're going to tag it. So if I have an item, let me see, it's IT support. I don't sub items, and just getting into all that micromanaging. And if you're not going to look at the micromanaging, why bother? Keep your files simple, 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 simple. And so I could say IT support services. So this is a starting point for the description, because later on I could add more. If I choose to put a tax code, I can pick the tax code. So if anybody invoices out in British Columbia, you're going to pick something other than HST, because you know that it might be GST. And there's rules and laws with that as well. So it's not as simple as that. But say if it's Ontario, when you create an item, you have to take it to an account. When you're creating an item in invoicing, that's a revenue account. So where are we tagging it to? Okay, so there's IT services there. So right here, you can default the HST and you can default the revenue account. You can't get past here and say okay without putting a revenue account in. So there, I'm just going to do that. And it has support services. And then I might turn around and say September. Maybe it's a monthly fee. You can put your rate in here, and there's your HST. You would not go over here and go GST and put your GST on a second line. You really, really, really want to use these codes, because it really helps you in all kinds of other avenues when you're troubleshooting or when you're looking at the reports. So here is where I am going to create that invoice. And then I will come over to receive payments. And again, I don't have my toolbar, so I have to come over to here. So receive payments. And I'll call up ATV. And this is the date that it is going into the bank. So not the date that you're posting it, it's the date that it goes into the bank. So what happens here is 1-3. I put in 113, and it's going to pick the only one that is 113. You want to be very careful. Sometimes it might pick oldest to newest, but it's not the right one. And now you don't have a right outstanding balance to this invoice. So it has picked the right one. And this here, undeposited funds, I find is worth its weight in gold. So if I send it to undeposited funds and I had other checks, I don't know if I can find other checks. Okay, so then in the same day, do I have another check? Do I want to deposit? So this is a really cool tip here, is if I have multiple checks from multiple clients, I can turn around and send it to undeposited funds. And the train of thought here is when I go to banking and I want to make a deposit. So where's my make a deposit? Okay, so when I make a deposit, all my multiple checks are going to be here. And when I click them off, when you look at the bank deposit book that you wrote up, and it was check after check after check, maybe there was 10 checks, and they're all listed here in undeposited funds, then you can click them off, and the only thing that's going to the bank to reconcile will be the total. And this is the total that matches your bank deposit book. So when it comes over here and it goes to the bank on September 14th, 2021, they're all sitting here in multiples. And so this total here, when you're reconciling, you're not seeing all the checks, you're just seeing the total of the bank deposit book. Stops you from pulling out the bank deposit books. I'm just gonna grab that. And so that is kind of cool. So now, so David, if you said, Janelle, correct me if I'm wrong, you said, how do I make a deposit if I didn't make an invoice, and how do I receive that? And that would be simply make a deposit. So if you wanted to record a deposit and pick your right bank account, so that's, say it's going into 1234, it's about the date that it's actually going into the bank. Then you can say receive from, let's see if I can pick somebody. So say if I didn't have an invoice and it was Base Technologies, this is where I will pick up and send it off to the income statement. It's not as great of a process if you're bypassing receivables, like you're not invoicing, you're just receiving deposits. It's fine. There's nothing wrong about bookkeeping as long as you keep it simple, keep it short and sweet. If you're spending too long on a posting, there's probably a better way. And you want to keep it simple. So if you did some consulting, so you can send it to the revenue, and then you can say consulting services. So there's no invoice. And you can say whatever you want here. And maybe it was an e-transfer. And you can also set up your payment methods here. If there's something here, like there's wire, there's checks, American, somebody paid by MasterCard, somebody paid by Stripe, whatever you want, even if you have to make an adjustment to fix something, put something in here. But if it was an e-transfer, it could be just a direct deposit. And then you'll put the amount here. But here's your problem with this direction. There's no tax code. So you would actually have to come in here, GST, HST on this file, and just say continue. We know we're manually posting into the taxes. And so I'm just going to finish this off here. And then I'm going to go consulting services. Everything's about details. Everything is about detailing. And then here, I'm going to go HST. So I'm telling myself in my details when it's time to go reconcile my HST that I'm going to see that little extension there. And when I go to prepare my HST report, bingo, we're good. So direct deposit, there's my $13. And then here's the amount that's going to go over to bank 1234. Let me do, Janelle, let me know if that was good for David. And so we also have credit memos. Just trying to see if I can get the toolbar back because I'm used to a toolbar. Nope, that's not it. Okay, credit memos. Oh, I'm going to stop share. I'm going to get into my QuickBooks and I'm going to open up a credit memo. Back to Zoom, share. So a credit memo is you want to give somebody a refund or product was returned this is, it's really interesting. You have to think, sometimes sometimes you have to know your debits and credits and what's happening. When I do accounts receivable and I create an invoice, I'm crediting revenue, because all revenue, by the way, is a credit. The offside of that is receivables, and that's a debit. When I receive the money, I'm crediting receivables and I'm debiting the bank. So money coming into the bank. We have the opposite of that if we're given a refund or we're returning something. Now this becomes credit memo, accounts receivable becomes a credit, and the revenue becomes a debit. And it really takes a while to understand what's going on in the debit and credits. And I'm going to take you into a GL tonight, and so you can see that. But if I wanted to give somebody a credit, I'm doing exactly the same thing, but behind the scenes, I'm doing exactly the same thing, except the debits and the credits are reversed. So if I wanted to do IT services and maybe I boo-booed with the timing and it was a monthly fee and I didn't produce what I was supposed to produce, and I can say refund, or I could say credit on September services, anything that you want to say. And maybe you're giving a $300 credit. And so this is going to show up on the accounts receivable listing as a credit. And if I have an outstanding invoice, it's really cool. I can retain this as a credit because I really don't want to give it to them right now, or I could apply it to an invoice. And in that way, it takes, say, $1,000 invoice and it brings it down to $700. So there's ways you can do that. Giving a refund is writing a check for that refund. Retaining as an available credit is retain that $300 and apply it to the next invoice. And this one is applying to a current invoice that's on the system. And I want to just keep this clear because I want to show you how it shows up. And so that's accounts receivable. And when it comes to the credit cards, it's really important that you see this, how to create credit cards. So again, I'm living and breathing by no toolbar. Give me 1 second. QuickBooks. So under banking, you will see enter credit cards. So I'm going to share. So under banking, this function here in QuickBooks is not completely understood over the years. But so what I will see is people going into pay bills. I'm just going to shrink that for a second and bring back. Yeah, I'm not going to do that. I have to stop the share again. So what I see a lot of times is people will go in to enter bills, do a TD Visa payable, and right there they bunch all the activity in multiple lines. And if it's a busy credit card, it's line after line after line after line after line all the way down. And we don't really get the right activity out of that. There's too much of a risk for error. So this enter credit cards, it's under banking, and right third from the top, it says enter credit cards. And this is where you can turn around, have the statement in front of you, and you're going to start telling that story per activity, one at a time. This is a great function because you can mirror. We're always about mirroring the credit card statements and the bank statements. So whatever you see on those statements should be individually posted into QuickBooks. We don't bunch anymore because in an audit, you can get into trouble if you didn't do it right. Sometimes it doesn't work out. And at the bottom, you have to plug in 10. I just said a bad word, but I'll find that some money has been plugged anywhere just to make it reconcile and close. But here, if I have the bank or the credit card statement in front of me, I can say SO a million times over. And my memo is going to be the memo that is on the credit cards. I might say SEP for September. And that reference number can be the same reference number over and over and over again. I don't have to put the years. So in this function, I can use the same reference number over and over again. And I like it because when I'm looking for a receipt, I can go into my GL and go, oh, that's the September statement, or that's the August statement. So that is kind of cool. And then say, for example, if it was $113 for fuel, I'm going to put in my memo. I can say auto fuel. I can say fuel. And then if you come down, you can go, is there auto fuel on this? Yes, auto expenses. I normally don't do auto expenses. I'll do auto fuel, create an account for auto repairs and maintenance, and create an account for auto insurance. I really don't bunch the three together. I don't like doing that because down the road, some business owner is going to ask me how much money have I spent this, this, and this, and I don't like bunching certain things together. But I can come up here, I can use the code, and I can go $100 and fuel. And so this is kind of cool because you can see, you can do SO, you can do Shell, you can do, is there Husky on here? Husky, you could do Pioneer. So if you mirror what's going on in the credit card statement to here and post these individually, what's going to happen is for you to know that you haven't missed anything is you can go over to reconcile. And all right, give me 1 second. Stop share. So you can go over to the reconcile and reconcile credit card. So here, for example, let me see if I can find one that has an amount. So for example, the Royal Visa Gold was last reconciled on May 12, 2013. And so the next one is June 12, 2013. There's my beginning balance. So we can reconcile the credit cards the same as we reconcile the banks. And so if I came into here and say if my ending balance was $12,034.50. Okay, then I'm going to see payments. I'm going to see all my payments over here. So I'll go through write checks and put my payments. My payments will show up on this side. My credit card credits, if there's a refund or a return, will show up on this side. And all my Visa expenses are going to show up on this side. And if I click them off, I can click them off exactly the same as a bank statement. And this is one way of knowing that you didn't miss anything. And then what happens here is when you look at the GL, you've got that full detail of what's going on in the file and the activity. And this is how it keeps you safe because you can defend your postings. So I'm a fan of the bank statement being mirrored. If I have to troubleshoot, I don't want any bunching because I'm going to be that much longer trying to troubleshoot why something is out. If I'm a credit card, same thing, no bunching, because if somebody says to me as a client and says something's wrong with my Visa, I can't really get in there and try and get into their head and say, well, how did you calculate this? So I am definitely a fan of individually tracking everything. And so that is your accounts receivable, accounts payable, and your bank and your credit cards. And if I want to modify and go into my bank statement, I'm going to do exactly the same thing here. What's my beginning balance? Beginning balance is the same amount of my closing balance from last month. That's your start point. Then your next month is going to be the closing balance of September. That's your end point. And everything in between, if you've posted correctly, will all be here. And one thing to point out, another proactive suggestion here is, I'm just going to click on this and get all my debits. So one of the things here is you don't want anything staying unclicked. If you have something that continues to be unclicked, it's a check that hasn't been cashed. So you're kind of waiting for it to get cashed. Did it get lost in the mail? Or is it a double posting? But any debits or any credit cards that have been posted and they're not getting clicked off by mirroring the bank statement, you can troubleshoot and see if you've got a double posting, because debit cards and credit cards are real. They're active. They happen. You buy something, it's going to be on the statement, well, most of the time anyways. But it's going to be on the statement. So if you see doubles here, if you see things that are not being posted or clicked off when you reconcile, that's an issue, and that's an issue that you have to troubleshoot in. So I do find when I inherit a file, these are the things I look for. I look for old postings that have not been clicked off. I look for old deposits, old debits, and old checks. And do they need to be adjusted? Here's a prime example of why you spell the word debit right. And if you want to say auto instead of debit, but just keep it consistent and spell it right the same time, because all these entries will show up in the same progression on your bank statement. If you spell that right, it's going to go by date. And then there's your progression right there, and you'll see them all in a row on your bank statement. So it's kind of cool if you get your check number or your reference number real. If you have massive bank accounts, you can click on here and see right now I've unclicked it. So I got my check numbers first and my debits second. I'm more of a fan of my debits first and then my check numbers second, maybe probably because that's how I started. But the other thing is if I have a huge bank statement, and sometimes I do, and I have to reconcile it, sometimes it's better to go by amount. So it'll go the lesser amount to the more expensive or higher amount. And then instead of looking at the payee and the checks, I'm looking at the dollar value. And that speeds me up pretty quickly. Otherwise, if it's an easy bank statement, I'll go by date. And then there's all my debits and there's all my credit, my check numbers. So again, if you don't have anything you have stuff that's old that's clicking off, you have to look into that. And the reason why we have to look into things that are not getting clicked off when we reconcile our credit cards and our bank statements, quite frankly, even our mortgages and lines of credits, is because that affects the bottom line on the income statement. So if you have double postings, or if you have too much revenue and a double posting in revenue, or a double posting in checks or debits, that's going to change the bottom line. So you're not going to have an accurate bottom line. And a business owner needs to have that accurate bottom line so they can make informed decisions, especially if they're about to go buy things or if they want to take the next step and grow their business. They have to grow on accuracy to the numbers. So that is very, very important. I'm just going to watch my time here. I'm not going to touch too much on payroll. And the reason is I have another payroll up starting in about 3 weeks. There's a payroll session. So I'm going to leave a lot of that to there. And I'm going to have to talk to Zoom on how I can get rid of this share that's covering up my toolbar. So give me a second. Payroll. It's one thing I want to talk to you about payroll. And that is share screen. Payroll liabilities. They're in the reports. Okay, they're in the reports section, and it'll be under payroll employees. One important thing is we have to get our remittances clean. We have to keep them clean. We have to keep them accurate. And when you go and pay your payroll liabilities, you have to go through employees and pay payroll liabilities. You just can't go to write check and write a check for the payroll liabilities, because it doesn't relieve this linked report behind the scenes. So when it comes to payroll, one quick thing I want to mention here tonight is when you pay your payroll liabilities, you want to see 0. You don't want numbers being left behind, because that just means your T4s and what you pay, your T4s are going to add up to a certain amount, and what you paid is not right. And then you're going to have penalties, interest in the end. And the other thing with payroll is make sure that your payroll liability schedules are up and running. So when you go to help and you go to my license information, so if you want to write that down, because it's that time of year, you want to make sure in the right schedule, but you can go to help my license information, and your I'm just gonna go get that. Your schedule needs to say December 31st, 2021. So let me share that screen again. So this is help my license information. And this is the most important thing for your payroll. January 1st, before your very first payroll of the year, and June 30th, before your very first payroll in July. Make sure you've updated your tax tables. Now, I'm going to head off to the general ledger. Janelle, is there any questions?
No, we're good, Sandy.
Okay, excellent. So I'm going to stop share. I'm going to get into the GL. Did I hear something? Okay. Okay, one sec. Okay, the general ledger. I'm 40 years at this, guys. I don't know how many people, I'm going to say 95% of the people that are bookkeeping across Canada are not looking at this. And this is really important to help you sleep at night, knowing that your numbers are correct. And so, again, I've already mentioned, we always make mistakes. We do. We especially if you're female, we think we can multitask, but apparently we can't. Not when I look at my GL and I kind of see some boo-boos just because I'm thinking about multiple things at the same time. So there's some things I really want to talk to you about here when it comes to your GL. And the first thing is I'm going to get into how to memorize reports. That's going to be my next thing. But I really want to stress a certain amount of things here. When you're making up a report, let's just talk about this for a second. This general ledger comes up a bunch of gobbledygook. It comes up with split and invoice and type and all kinds of columns. You can actually come into custom and name it anything you wish. You could go general ledger year to date. You could say anything you wish just by going to custom header and footer and call it. So there's many times when a business owner asks me for specific reports that are outside of the norm, then I'll save them and memorize them. So right here, I can name it anything I want. When I come over to display, I will get rid of type. I will get rid of, I might say source name instead of name. Source name, if you're using classes, which is an advanced move, part of QuickBooks, then you have to switch from name to source name. So I might switch that. In my general ledger, I don't care about addresses and profits and stuff. I'm talking about finances here. So I don't care about half this stuff. What I do care about is the memo, and I do care about visually seeing the sales tax code. Really important. This is why you want to use the code. And I care about, for me, seeing the debit credit. It will come up with the amount where the debits and credit columns are one. I don't like that. I want to be able to see what's happening between a debit and a credit. We're just going to go through that for a few minutes here. So I'm going to pull on the sales tax code. And the really cool thing here is you can just take your mouse over top of a column and switch it over. So normally debits first, credit, and the balance. But if I want to switch it, I can just put my hand over a column and switch it around. But this is kind of how I like it. So what's going to happen here? This is proactive bookkeeping, where you're going to stop for 45 minutes to an hour when you're closing a month, and you're going to look at things. You're going to stop and breathe, grab a coffee, tea or a nice beverage, and you're going to say, how is my data entry looking? Did it work? Did it come out the way I expected it to come out? So many times when you're posting, you might think you're posting to computer expense, but you might be posting to computer assets. Big mistake. It's just a mistake that happens all the time, me included. And it's just because I'm going too fast. I'm busy. I've got things to do and I got to move on. And so I do stop on every file before I send it to a business owner. I stop on every file, and here's some of the things that I look for. So one of the things is detailing. Do you notice how pristine that is? It's you want it as a data entry person, bookkeeper, make it easy on the eyes for the people that are seeing the numbers. You want to make sure it's easy on the eyes. That's why I kind of put the month here, because I could come over here and look at the numbers and do I have all of them? But over here, it's prettier for the accountant, it's prettier for the business coach, and the auditor will see that the bookkeeper is really trying to make sure that things are accurate. The other thing that I do over here is I look at the sales tax code, and this is why we use it. H means it's 13%. So when you're intimate with your numbers, you know that TJJ Consulting is Ontario and they're HST. So I'm looking for all HST here. So that's why the sales tax code goes on. If I'm into interest revenue, I know there is no sales tax, so I'm happy there. If it's penalties and interest, I know there's no sales tax. So when I come to a GL and I'm reviewing, I'm going from left to right. And this is a whole year that I'm looking at. There's website and design programming, Rogers Consulting, there's an H. So that's telling me that it's Ontario. And it's really interesting if you have a file where people are purchasing in BC and Saskatchewan and Newfoundland, well, that's when I turn my process around, and at the end of every detail, I put ON for Ontario, BC. And that'll tell me why I'm picking G or N or NL for Newfoundland, or HS for, Halifax, or Nova Scotia, I'll go NS. But I'll put it here in the detail because you want to make sure that you're picking, like you're telling the next person in that, putting an extension of NS here. This is why that this is Nova Scotia NS here, is because that's why it's a different tax code. That's just being proactive. It's just saving yourself of all kinds of questions down the road. So here's my reference numbers. My numbers always here. This is telling me, this is where before I prepare HST, I'm coming in here and I'm looking at things. Have I posted the HST properly? Because Revenue Canada is coming in here. The biggest audit is HST. They want to know, did you overclaim ITCs? It's the biggest thing right there. Two things that they're looking for. Number one, you didn't claim enough revenue, but you claimed all your expenses. That's a main audit that people get caught on, is they kind of don't claim all the revenues, but they claim all the expenses. And Revenue Canada we have 1,000 ways that we could rip off Revenue Canada, and they have 1,001 formulas to figure it out. So we have to be, you have to kind of be careful there. So here, if I have 407, I don't have HST. I could use E for exempt, Z for non-exempt. You can use codes. I prefer to have a code, some kind of code here, but if it's not there, these detailers are telling me why there's no H over here, and why there is an H, why there is no H's. And I'm going to get to cash receipts in a second. One thing I like to say to you is when you're doing details, try not to go too far. Sometimes I see a book on multiple lines. For example, so-and-so went here, they went here, they went here, they went here, and the description is 3 or 4 lines long. Well, you're not going to see it here. So there's only so far you can take this out where you can actually see the whole thing. So try and limit yourself to half of the size of what the memo offers you. So for example, if I was in debit, I'm not going to go past here. in my detailing, right about midway, because otherwise you won't be able to see it in the GL and it defeats the purpose. So you will see that this is pretty consistent for keeping it clean and easy. You will see that I don't use for and the. I go space dash space because it's more linear. Again, it's my OCD. So I don't know if I really have OCD, but I do have it in bookkeeping. I have to have things, when I look at it at a different level, I want to get through it as fast as possible. And if my details are cluttered, it just slows me down and it's more costly on the business owner. So there's very specific things I'm going to say. And I'm not saying that if somebody bought multiple things at Staples or for COGS and multiple materials, you don't have to list them all. You just have to say materials. It's just telling you in the details that you did see that paperwork, and it is accurate. You're telling a little bit of a story at least. Here's rent, January, February, March, April, May. Very simplistic, very, very linear, very detailed, easy to look at. There's the check numbers, but if I paid online, it might say debit or it might say auto. Bell Canada, TELUS. You'll see that in my account listing for this file, I chose to separate cell, office, phone. It's always different in every file, but again, you're customizing to the file that you're working on or the files that you're working on. And we have to kind of get the business owner to come halfway to us in our processes and tell us the story as well. But at the same time, we have to kind of conform to the business owner. So because they're out there being very busy growing the business and bringing sales in, which kind of pays for our paychecks or our invoices. So, and plus everybody else. But you'll see that the sales tax code, instead of opening it up and say in spot checking, did I pick the right code? It's sitting right here. So if you have your detailing right, and if somebody's purchased something in another province and it's BC, then this is, it confirms when you go BC at the end of this, it confirms why that's BC tax or a G for 5%. So again, that's proactive bookkeeping further than you think. It's proactive bookkeeping straight to the auditor, because that's what they're looking for. They're looking for overclaiming of ITCs. Meetings and meals, same thing. See how this is all debits. So this is a debit card being used. It's not bunching for all restaurants. It's this person went to Artisanos and Bistro, they went to Turtle Jacks, they went to Pizza Nova, they picked up stuff, Rosser House, and you're telling that story because most business owners can't remember where they were in a month, and then this just reminds them of all the things that was going on. So it's a good thing. It's a great relationship between the bookkeeper and the business owner. So you're going to see just that cleanliness of all of the detailing. So I'm going to come back here. One other thing. Most of you will say that you have a business owner with cash. Say there's a Visa that's not on the books, a personal Visa, but they use it for business, or they use it all the time for business. So if you're not going to pay them back, if you're going to pay them back, you could go through Interbills, put the business owner's name, and post that activity there and write them a check or transfer the money. But if they're not going to pay them back, that's a journal entry. And I just want to say right now, I don't journal entry ever. I'm maybe 5% journal entries to 95% using write checks, enter bills, create invoices. Bank fees or write checks. Interest is write checks. I don't use the bank reconciliation function where it has it there, because half the time the dates are off, and that kind of can screw you up a bit. So this is what I do, is I come in here and I go shareholder draw right here. So whatever the total of the receipts are, this is where you kind of bunch, because it's personal. But what I do here is if I have to look this up, it's a TD Visa, ER is expense reimbursement, and it was for the April paperwork that they sent in. But here's the key here. say that here's your extension, meeting meals, parking, Go Train, web hosting, Henry's, and then this is where you would go HST payable, HST paid on purchases. I don't necessarily usually use this tax item. I never really have. And that's another story. I don't always trust the HST reports. I like to make up my own that tie into the balance sheet. And that's where I feel like I'm safer. But this tagline says that these are HST paid on purchases, on personal purchases. But this tagline here is here for a reason. If I just did this all the way down, when I go to my GL, I don't know if I got a posting error. So for example, go back to my GL. See how the extensions come here, right there. That's beautiful. So if I was sitting, if this meeting meals was sitting in parking and travel or office admin, this extension right off the bat tells me I posted something incorrectly. So I like that. When I come here and I look at these, I can say, oh, that's a mistake. And then I can very quickly correct that. This is meeting meals. I'm looking at tax. We can also discuss that there's a rule with Revenue Canada that you can't write off 100% of the meal, and you can't write off 100% of the HST. In QuickBooks Online, you can have a sales tax code that does 50-50. I believe we can set that up here too. But it makes for longer postings. So if you're a person that's a part of your rule in your office and you're 40 hours a week, that's great. You can do that, do the longer route around, because sometimes you need the calculator, or you have to pick a different sales tax code for it to do it behind the scenes. Or what I do is talk to the business owner, and I'll do at the end of the year adjustment 50-50, and at least the auditors can see that it was just a straight across the board 50-50, and it doesn't slow me down on my postings. So I just really want to be specific when you're doing your data entry. It's all about here. It's all about looking at your GL. Is it easy to read? Does it make sense? And here I look at it year to date all the time. I always look at that year to date because I can pick up things. I can pick up things that just don't look sense. So I always go year to date whenever I'm looking at this. And, you know, it's about presenting a file to the business owner, to their coach, to their accountant, and it's about presenting that polishedness of the bookkeeping. But for you as bookkeepers, it's about being able to defend your postings, because you may have to defend them with the business owner because they just don't believe they spent that much money when they did. So, but very quickly you can say, yeah, but you were here, here, and here. And then it's about defending with the auditor as well, because you can then turn around and say, okay, well, I know where that paperwork is. So when the reference number is not being used in a journal entry, and this is one of the reasons why I don't use the draft reference number all the time, is because, let me see if I put in my initials, that'll be the reference number there. There it is. That's the reference number. So I'm trying to do a reference number as much as I can, because it just tells the story where that paperwork is. And so I think that's really, really important to know. And I can't stress enough of detailing to a point 6 months down the road, you know what that entry is for. And keep it short and simple. You don't have to tell a book, tell a story. What is it in short form? If you are a freelancer on this webinar, and you're looking for more clients, I'm telling you now, you get as detailed an OCD as this, and the accountant sees this type of work and you're accurate, you'll never have to go looking for clients ever again, This is how I built my practice. I just was as polished as an accountant is. And it has been worth its weight in gold. So it's just telling a really professional story. Any questions, Janelle?
Not right now, Sandy.
Okay, I'm gonna do a couple of memorized reports, and then I'm gonna open up for questions. So in reports memorized, you will see here, I have what I call the most important reports on a general format. Then depending on the file and what's going on in the file, how big the company is there other cross-checking reports that we have to do? But I like to set up my reports. They're memorized and I don't have to do it ever again. They're here. So it makes me more productive when I'm in the review stage. So for example, I have my AP summary and that tells me who owes me, who I owe money to. And it just tells me how old it is. So AP aging summary is really saying, oh, okay, I better pay over 90 because it's getting long in the tooth. They're going to call me. And that is just a nice summary, who's current to who's over 90. If you want to see the details of that, that's what unpaid bills is for. So if I come here, I see a credit of Business Cell Canada of $1,000. So one thing here is I should not see, I'm just going to go back to AP summary and I'm going to click on this total just to see the details of this one. And so when you want to look at this is because you should maintain this well. I really should take this credit and put it against here. And that way I only see the 500. So that would be through pay bills and pick up the credit. And the 407, Air Transat, here's my aging. There's Saskatoon Inc. Who do I want to pay bills to? I'm going to stop the share for a second and I'm going to pull up unpaid bills or pay bills. So vendors, pay bills. All vendors. Oh, oh, sorry. I cleared them all out, so I can't do that. So I'll go back to share. So it's give me one sec. I cleared them all out a couple minutes ago. Okay. Share. Okay. So if I had a whole list of stuff like we saw about 10 minutes ago, I had a whole list of stuff here. I can click on any bill and amount to pay. You don't have to pay the whole invoice. You could just say, if this was 1,000 amount due, you could turn around and say, I'm just going to pay 500. So you just write 500. And if I had a credit, I could click on the name of the vendor and then come down here and go to set credits and apply that credit. So I think this is missed on a lot of times, but if I have something that I want to pay and it's owing, I can come to set credits and use that credit up. And you know what, if you have an issue like that, give me a call because I don't have a really great example on that. But for this one, Business Canada, I could go pay bills, pick up the 1,500, apply the 1,000 and set credits. And then this removes itself from this report. So it's really important that just because this is the accurate number that's owing for 500, we'll clean this guy off and make it the 500. So you want to maintain this unpaid bills section. And it's the same with aging AR. Who owes you money? Who do you have to call and get collections? Who owes you money? And so here it's the same thing, is you want to make sure that money continues to coming in so you can actually pay your bills. So AR and open invoices is very important. Open invoices and unpaid bills is just the detailed side of things. And here's something I really, really want to show you is Bingham's Consulting Inc. Unless you see credit memo here, this sort of stuff should not be happening. Bingham Inc. may only be 11,000 owing, and it might be true, but you want to do maintenance on this stuff and apply all these credits against the 223 so you can kind of clean this up and never see it again. That's really important. And sometimes we might have a cent or 2 cents out. So you want to come in here and go, oh, well, that's not true. I'm not going to call the client for a cent or 2 cents. So you'll just open up the invoice and adjust the HST and clear this off. So I think this is very important to keep an eye on this one. And the general ledger we were just in. General ledger tells you the story, is everything in the right spot. The balance sheet is the same thing. Are your numbers correct? You want to be familiar with the balance sheet. And I find a lot of times people are afraid of the balance sheet, but you shouldn't be. The more often you're in the balance sheet, the more you're going to be intimate with it and know that it's correct. But what I do is once I get into the GL and I see that's all right, I kind of know my balance sheet is correct. But again, you want to, as a bookkeeper, reconcile anything that's a bank. Look at your receivable. Is it true? Look at your payable. Is it true? Goodwill is probably a year-end adjusting entry. Undeposited funds, that's probably because it was a Friday and it was a Saturday that you went to the bank and it's not going to show up until the following week, and the following week is a different month. Sometimes that's okay. We have allowance for bad debts, which is usually a year-end adjusting entry. There should be nothing in there. When I look at equipment assets or due to from companies, due to froms are important. That's 2 separate entities. And so this company was paying some bills for a separate entity. So you can't just claim the HST and the ITC here. You have to post it if it came out of the bank to a due to from. You go over into the other file and then you pick it up over there, and that's where you claim the ITC. That's an advanced move, guys. That's just sometimes makes you drink by the end of the month. So I won't get into that. That's something all by itself. But you do want to make sure that your accounts payable is good, your fees is good, and corporate taxes. Anything on your file that QuickBooks has, you should be looking at. So a GL is great, but sometimes I might do a shareholder draw. And if I wanted to do a shareholder draw detailed report, I'm going to come to custom report and I'm going to say shareholder. And I'm going to go to display, and I don't care about type for me. Maybe you do, but I don't care. I might go to source name. I want the memo. I will put on sales tax code. Shareholders should have no sales tax code, but I will put it on there to make sure there is no HST applied when it shouldn't be applied. So I will put it on there. And I'll take the shareholder or the sales tax code, move it over. And I'm just gonna make this big here. And there we go. So I'm gonna get rid of amount, and I can just press down on my mouse and move it over. And what I can do is just clean it up. This is a one-time thing. Pressing down on my mouse until I get the square there, or the X or there. I open it up so I can see the whole thing. And then I come along, and right up here is I can memorize it, and my Zoom toolbar is covering it, but it's right next to comment on report. I can turn around and memorize it, and I can keep it that way forever. And all I have to do is come along and change the dates year after year after, and then I don't have to design these columns. And that's the other thing too, is you can come into reports, and I'm going to stop share QuickBooks, go to reports, and go to share. Hopefully I got it. Nope, didn't stay. Yes, let's see if it stays that way. No. If you go to reports, you can find all of these here. The AP, the AR, the unpaid bills, the open invoices, the GL, the balance sheet, the profit and loss. So here's some of the things. If you go to financials and you go to report and it says financials, you can see the balance sheet, you can see the P&L. And so what I do is I do multiple profit and losses. So if I say income statement and I see profit and loss, it's the same thing. This is revenue minus your COGS, cost of goods sold. There's your gross profit. And then here's all your overhead expenses. There's some interest. There's some other things that are other income or other expense. And then the bottom line is 145,000. So this is very important. So a business owner, by the way, for bookkeepers, they already have in their head what's their percentage of income. And I just have to go to custom report and add on percentage of income. And that's how I get that column. And I think that's very, very important because they want to know what's their cost for their cost of goods sold. And so if you had a product and they know it's a 45% cost, they want to see 45% cost here. And as bookkeepers, if there's no 45% cost, we have two jobs. We either have to prove that it really is 45% cost, or we have to go and figure out why it isn't 45% cost. Who's done the boo-boo? Like maybe there was miscalculations in the sales and that sort of stuff. So this one, it becomes a collaboration from the bookkeeper to the business owner. It has to be a collaboration. And the bookkeeper is responsible to say, I will go look to see if I've made errors, or sorry, bud, it's a 55% cost. So something's wrong on your end, and you collaborate and try and figure that out. So you have your revenue, you have your cost of goods sold, you have your gross profit. So your gross profit is I've made $170,000 so far based on my revenue minus my costs. And so I have $170,000 left to run all the expenses of my business. And hopefully in the end, you have a good net income or a net profit. If you don't, if it's negative, that's where you have to troubleshoot and say, okay, where's going wrong? But a bookkeeper, let's keep in mind that a bookkeeper lives and breathes bank statements, credit card statements. We live and breathe the activity that's on paper. So if we get that right, and it's not hard not to get it right, then it's black and white. It is what it is. And then we just have to figure out what's going wrong. Having said that, I've seen credit card payments that should stay on a balance sheet. I've seen them on the income statement. So I've seen lots of little horrors in bookkeeping that need to be cleaned up. But if you look at your work and you kind of understand and keep learning and keep asking questions and listening to people that have been around doing this, then you'll pick up your skills and become very good. So this profit and loss with percentage, I think, is very important. I will also do a profit and loss by month. And if a business owner asks me, do you want it by quarter? Then I'm going to come along and I'm going to turn it into a quarter. Okay. And so I might go by year. Sometimes I like to say, okay, I'm going to take this back to 2010 and pick by year. And I'll do a summary. So I just see the years to see how much the company has grown over the years. But by month is you can see the trends of when the sales are good and when the sales drop, especially if it's a seasonal company. And you want to see the highs and the lows. And the other income statement of profit and loss that I do is a previous year comparison. I would like to see where they stand, because most business owners each year, they say, I'd like to grow. And so you want to see how they're growing throughout the year, and you want to see where their costs are changing. So that's all found under reports, financials. It's sitting right there. You just have to click and memorize. And memorizing is right here, and you just memorize, and it might say, if you've already got one, but you've made some changes, then you just replace. Simple, simple, simple stuff. And the more you do this, the easier it gets. And here's the reason why I'm not a sub-accounter. See how I've just gone revenue, 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 COGS, COGS, COGS. It's all in alphabetical order. And if it was sub-accounted once or multiple times, you can't really read this report. It's pretty devastating to try and read what it's trying to say when you've got, it goes, actually the report starts here and it goes way over here and it's really hard to read. So that's one I don't do. That's one of the reasons why I don't do sub accounts. There's shareholder right there. There's a trial balance. Trial balance we don't really use until year end. I use trial balance twice. When I inherit a file, I want to see that the accountant trial balance matches QuickBooks. And if QuickBooks is off, I have to do whatever I have to do to make it match. That's your start point before you close off the next year end. And then I use this for year end closing. The only other thing is QuickBooks is off behind the scenes is because your debit column and your credit column should be exactly the same. And if it isn't, you've got a behind the scenes thing and you got to call QuickBooks and say, I've got something not working behind the scenes. And I've only seen it once, but when we're on the system that we're on for accounting, it's a 2-entry accounting. You can't close with a 1 entry. You can't close with just a debit or a credit. You have to have a debit and a credit. So this is how everything comes together, is by having your credit columns and your debit columns exactly the same. Just going to go back to your balance sheet for a second, just something came up. But when we take a look at a balance sheet versus income statement, your balance sheet stops at retained earnings and your shared capital. Sometimes shared capital is above retained earnings. So for the most part, your balance sheet, if you looked at your chart of accounts, that's it. That's the end of your balance sheet. Your income statement starts at revenue, covers COGS, overhead, and any other interest or expense. And I want you to look at this. This is how how QuickBooks ties everything in. If you see this net income of $145,926.05, QuickBooks behind the scenes is bringing that over from the income statement. So if I go over to the income statement, there it is right there, $145,926.05. So income statement comprises of revenue, COGS, and overhead expenses, and any other little things like interest or anything else that's happening on the file. And that's it. But how we tie the trial balance, we tie the balance sheet in to be balanced, is behind the scenes. That net income is coming over here. And that's not something that you do. A bookkeeper does. That's something that the program itself does. And that's cool because now we tie in to the balance sheet. So I have total amount of assets is 343,928.45. Total number of liabilities is 65, but my total liabilities and equity. So this is really something to think about. Total assets is 343,928.45. Total liabilities and equity is 343,928.45. It's a balanced balance sheet. And the only thing that really ties it in is retained earnings, any share capital or dividends, and plus the net income. And then it all works itself out. You don't have that. You don't have a balanced balance sheet. But the great thing about QuickBooks is it does a lot of that for you. However, case in point, I'm going to stop right here to see if there's any questions, but just because we have Sage 50 and QuickBooks Online, this is a desktop, just because we have it doesn't mean it's doing the debits and credits for us. We have to have some idea how it works. How does a debit work? How does a credit work? I do have, I can talk to, if there's interest, I can do another webinar on how debits and credits work. I can also do another webinar on how to pass an audit. And there's something like 11 audits. We don't think of the other 5, but there's quite a few audits that we could be called, taken to task to. And, but it's, to me, the bookkeeping, it's all about the bookkeeping. And we're the middle of a business pie. Nobody can do anything until the bookkeeping is accurate. And so it is such an integral thing for having this accurate. And I'm really happy that we're in a day of a QuickBooks technology and not those old green sheets that you probably needed 3 bookkeepers to finish off a month. And so I'm glad they're gone. I'm glad we have this. If you put QuickBooks, it's the better program that's out there. I rest assured this is the one that I can troubleshoot the easiest for. So I'm going to hand it. It's 8:15 or almost 8:15. And does anybody have any questions? Are we still awake?
Sandy, should we just still type them in the chat, or
No, actually, if you want to open up,
just open up?
Unmute, and if you have a question, that's awesome. And it is overwhelming, guys. Like, if you've been bookkeeping for a long time, that's awesome. Sometimes there's simpler ways of doing things. Sometimes maybe you are doing things that are very simple. Bookkeeping can be overwhelming, but the most important thing is getting it right for the business owner. That's the most important thing. And you want to sleep at night with your postings and your bookkeeping and know that it's accurate. But QuickBooks it's so flexible. It's so nice. You can do almost anything. I've rarely said, no, I can't do that with QuickBooks, where Sage 50, I've said that many times, I just can't do it. And with some of the other ones, I am not necessarily a fan of Zero yet, but I am working it. So I just need to give it some time. But Sage 50 was my first program that I started back in the 1980s, and I left it a while ago. I just found that I can defend my work faster and easier with QuickBooks. So anybody that is a Sage 50 fan, my apologies. That's just my opinion, because that's what I've had to work with. Okay, doesn't seem like there's lots of questions. So
well, thanks, Sandy.
okay.
And again, everyone, after I get the recording, you will receive that in the email that you use to register for your business. So thanks for coming out tonight, and we appreciate you supporting our programs.
Thank you, everybody.
Good night.
Good night.